So Rick wants to know if the price of businesses goes down if there's a drop in the economy. Hey there, everyone. It's David Barnett from davidcbarnett.com, the blog site, YouTube channel, iTunes, SoundCloud, Google Play, Spotify podcast, where I talk about buying, selling, financing, and managing small and medium-sized businesses. I got a question. I had a group on Zoom last week and had them send in some questions for the group chat, and one of them was really there were a few great questions in here, but one of them is from a guy named Rick, and he asks, over the course of your career, have you discovered the price of businesses dropping with the drop in the economy? And it's a great question because there's a certain assumption behind the question that if overall economic activity goes down, then the value of a business would go down, and I can see why someone would feel that way or why that would make sense. But let me tell you what I actually experienced during the Great Recession. So I had just been starting off as a business broker back then, and what was happening is that when the recession started, of course, the financial statements of all these businesses hadn't yet gone down. And so people still wanted, the price of their business based on their financial statements, right? Because these things take time to react. And then once financial statements started to come through showing a reduced profit or sales level, what then started to happen is we would be telling people that their business was worth a lower amount. And here's where it departs from Rick's assumption. So what would happen is when people were told their business was worth less, if they didn't need to sell, they were withdrawing from the market. Because their assumption is that all they had to do then is wait a couple of years for the markets to rebound, their financial performance would improve again, and then they would be able to sell for the higher price. So we had a lot of people pull back from wanting to sell their business with the idea that they were going to wait. Now, some people need to sell because of all kinds of personal concerns, and those are the true sellers of small businesses. They have a pressing personal concern, and they would still have to press forward. But here's the other thing that happened during that time is not only did the reduced numbers on the financial statements cause the prices of businesses to be pushed down, the terms had to become more flexible for a couple of reasons, but mostly because credit became less available. As the banks started to deal with bad loans, etc., they started to lend less money. So for those of you who don't know, banks create money through the miracle or fraud, depending on your point of view, of fractional reserve lending or fractional reserve banking. So when people deposit money in the bank, then that means the bank will create many times that amount of money in loans. And as long as everyone doesn't show up all at once trying to withdraw their money, it works. And so when loans start to go bad, it's the assets on the bank's balance sheet start to evaporate. And they have to make sure that they have enough equity in order to make sure they don't become insolvent, or else then there's a bank financial crisis, which is what we started to see in 2008. And so that's why the Fed and other governments around the world had to give money to the bankers to prevent the banks from collapsing. So if their loans start to go bad, their assets start to shrink, they're worried about shoring up their balance sheet. What they then do is they try to go around and collect deposits. So they start offering better interest rates and high interest savings accounts and things like this to bring cash into the bank. And they're very weary or leery of making new loans. So when I was a business broker during that time, I went, it was a decade ago now, but there was a stretch of time, almost a year, where I did a bunch of deals and there were no banks involved in any of the deals. I even had people at certain points who couldn't remortgage their homes, even though they had good credit and their homes were worth a lot of money and they should have qualified for a remortgaged bank loan on their home to take some equity out to buy a business. They couldn't get it simply because the bankers admitted that they were told not to write new mortgages for a period of time. That was during the big part of the crisis. So if you're waiting for a recession because you feel that you're going to get a better deal on buying a business, it won't be when people on the TV news start saying we're in a depression. you're going to have to wait for the depression or the recession to cause sales and profits to go down in the business, and then for those numbers to be reported on the business's financial statements. And then you're going to have to wait for one of those owners to need to sell so badly that they're willing to go into a bad market from their point of view and offer their business up for sale. And you're going to have to also probably have more cash, because the financing that's available today may not be available in a time like that. So, there's a lot of buzz around about downturns and recessions and all this kind of thing coming. I don't know precisely what's going to happen. And I don't know what kind of intervention the government's going to try to make to, stop that from happening. But here's the point, is if you need to get into business because you want to own a business and it's going to improve your life, and you find the right business which fits into what your self-image is of a business owner and the kind of business you're going to own, when you are in business, there are all kinds of things you can do to respond to a downturn in order to survive the downturn. And so most of it has to do with being willing to make difficult decisions, cutting costs quickly enough when your orders and sales go down, for example. And I wouldn't put off buying a business hoping that I'm going to get a better deal down the road, because you also have to consider the opportunity cost of what if I do this and it actually takes me another 4 or 5 years. How old will I be then? What will I have missed out on? What opportunities will have gone by not being in that ownership position earlier, right? What I do talk to my clients about, though, is if they feel there's some kind of downturn coming, then they need to consider that in the offers and terms that they make today. So what do I mean by that? Well, if you think that sales and profits could go down over the next couple of years, then maybe when you're negotiating for the business, for example, in the seller financing portion of the financing, maybe you should be negotiating certain features that help you with your cash flow if you have a cash flow problem at some point in the future. There's no reason why you can't put certain features into a seller note today that will help you later on. And to learn exactly what kind of features I'm talking about, that's the kind of stuff that we talk about in the Business Buyer Adventure group coaching program, where I specifically spell out with people, here are things you could do. This is how you could set it up. Here are the things that I've done before. Because I've worked in all these kinds of things, risk reduction techniques, basically, into seller notes in particular. Anyway, great question, Rick. And I know it's kind of apropos because people are talking more and more about a potential downturn in the economy. And so don't forget, if you have questions, head over to davidcbarnett.com, my blog site. There is now a SpeakPipe tab where you can click on the right-hand side of the screen, and you can actually talk into your computer, and I'll get the audio recording, and you can ask your own question in one of my videos. Yeah, cool, right? And if you haven't already, head over to the blog site, davidcbarnett.com. Sign up for my email list because it is November, and that means very shortly, Holiday Chat 2019 season is about to begin. But there's only going to be about a dozen spots, and they're going to be offered to the people on the email list. If you don't know what Holiday Chat is, it's basically where I sell 1-hour consultations with people over the internet, 75% off. The only catch is that they're going to be put on the channel. All right? And with that, we'll say see you later, and have a great day. Bye.